Hello and welcome to Trading with Malachi. It's Monday, the 10th of December, not too long till Christmas, and it's 8:30 in the morning. So I'm going to start this video like I start every video with my disclaimer. I'm not a financial advisor. These are just the thoughts in my head and how I see the market on a day-to-day basis. So let's get started. We're currently looking at the US dollar and it's on the daily chart. And as we are coming into a new week, I wanted to touch on our bias because we've been trying to, in essence, buy our other currency pairs, Euro and GBP versus the USD. Sell here and buy here around these regions. And as you can see, this channel has been forming for a number of weeks. So from the end of September to now, the beginning of December. And you can see price was moving in quite a predictable fashion. It would come down to the bottom of the channel and then trade right back up to the top of the channel again and break the previous high and make a new high. Trade back down to the bottom of the channel and then reverse, go back up to the top. We see this happen once, twice, 3 times. And on the 4th time, it failed. So it failed to make a new high. And then we saw this consolidation around this level of support around 96.59. And subsequent days have seen the dollar market sell off. And we now came down to previous lows and are potentially now in this range. The good thing for us is that we have DP here. So DP could act as resistance and push this market down even further. I do think that this market is going to make a lower low. We need to see how this daily candlestick transpires by the end of the day. But if we see a very strong red body candle finishing around 90, 95, 90, 95, 80, anywhere around that area, then we can expect further downside pressure throughout this week on the dollar, which will mean that we're buying our Euro and GBP and looking for longs on those charts. So let's have a look at our Euro USD. So here we are again at the daily chart. And as you can see, we've got this pattern in reverse of the US dollar, which you can expect because this is the Euro versus the USD. So we're seeing it move in the same channel. And last week we were talking about we wasn't expecting it to make this spectacular break out the channel, and it then subsequently sold back into the channel, but didn't make a new low. So that got us worried, as a new low wasn't created, and we saw this choppy area, and then subsequently price has moved out of this channel and is looking like it may challenge its previous highs. Now, on Friday, in anticipation of this move, I wanted to get in front of this possible move back to previous highs, as we haven't seen this new low. So I traded through a break of DP. And so this is something I wouldn't recommend. Now, what I should have done was close my position on Friday. But because we had broken out of this channel, I was expecting the dollar to continue its downwards movement, thus meaning that the euro will continue moving up and potentially testing new highs. So this is, it's my business partner's birthday today. Happy birthday, Mark. Get that out of the way. So I will, as I was saying, I've traded this market on a break of DP to a exit at previous highs. And that will net me around about $400 profit once price does get to this level. Currently making 1% on this trade. But really and truly, this trade is a riskier trade. What we want to see is potentially a break of this level, and for the Euro USD to make a new high, come through our 200-day moving average, and potentially touch R2, and then a reversal in this area. Anywhere in this area, we'll be looking to go long on a pullback down to 1471. So we really need to see this market make a new high, and this old trend reverse, and we now see a new trend, a new uptrend start to develop. So I mean, for a new trend to develop and we don't continue moving down, we have to make this new high. So what could happen is that we could move up to this level, and then the market could sell off again back down to similar lows, which is down here. And we're moving in this channel. So instead of getting involved in a trade when the market is in this zone, you'd have there's more percentage chance of you getting a trade to move in your direction if you're trading outside of these extremities. Because imagine if price breaks through this level, you could expect price to test its previous lows back in November. But if we were to break through this and make a new high, we'd expect price to test its previous highs around 115.96. So any trade long on a break of this line or short on a break of this line, the percentage chance of that trade going to target is much more likely, or at least you'd still be able to get your position on and take risk off the table. If you want to understand more about chart analysis, chart patterns, candlesticks, you're watching and you find this really interesting, but you just don't get it, then click on the link to Hidden Wealth Blueprint and join the Hidden Wealth University for free, and I will teach you how to trade like a boss. But back to the analysis, let's jump into our GBP USD. And as you can see, we're still on a one-day chart because we want to get bias for the week. Today, in essence, there is no new chart formation for us to get excited about to trade. There are no markets of interest, but I just want to give you an overview of the week and where we see price going, so that when we do get a fresh alert, we can start placing trades in the market. But what do we need to happen to get that fresh alert? So as you can see, we're still moving in this channel, and because it's GBP versus USD, the same pattern process is happening on this chart, and we're now trading at the bottom of this channel. But the strange thing is that this is GBP versus USD, and this is Euro versus USD. Although we've been both moving down, we're seeing a breakout of the top of the channel on the Euro. So the Euro is strengthening against the dollar much better than the GBP versus the US dollar, because we're at the bottom of the channel. So we may see a price increase of the GBP up to the top of the channel. But my only issue is that I don't want to buy pounds while we're in this Brexit situation. Any bad news could come out about Brexit, which could push this pound down. We may see a hold up around these average lines, and potentially I may be more interested to get in on a sell side of cable around this level. However, because we have broken out of the channel in our dollar market, anywhere around this level will be precarious, because a breakthrough could see further downside pressure down to the 95.16 level, which would mean that our GBP will also break through this and make a new high up to the top of the channel. So in this area, it's very risky to take trades, because the market may move against you and shake you out of your position. So what we want is, we want to see a fresh formation. We want to see a lower low, which would mean that our US dollar is going up, but it's not going that direction. So a lower low is unprobable. What we're potentially going to see is a move back into the channel. I don't want to really be trading GBP USD coming up to the Christmas period, and I'm going to disregard this chart. So let's move on to our USD JPY market, our dollar yen market. And as you can see, we overall see the dollar strengthening against the yen. Let me zoom this out a bit. And this channel has been more established. We've seen it move once, twice, 3 times, and then the hold up, and then the sell off. Because it looks like the US dollar, but not as aggressive, because it's paired against the Japanese yen. Now, again, I do have a trade on this market, the opposite direction to my Euro USD, selling this down to make a break of the 100-day average. And I'm coming out around about here. So I nearly got stopped out. Not stopped out, sorry. I nearly hit my target this morning, but it's subsequently reversed. I don't see much more upside. It's got right back to where it's come from, and then we're going to see some more downside pressure through the rest of this day. But again, what we want to see is, we want to see a fresh formation. We want to see this 50-day moving average line come down and cross our 100-day moving average line to move into negative sentiment, and then we'll be more confident in when we're placing our trades in this position. Now we're going to move over to our final chart, which is the Euro JPY. And the problem with this market is that it's been moving sideways for a very long time. I mean, we came down here quite aggressively, but that was back in January to June. But from June to December, all we've been doing is going sideways. And you see, we've been in this channel. And the problem with this channel is that it's not respecting our level of support and resistance. It will keep breaking through it. So if you try to place a trade around these levels, you potentially can be shaken out of your position. Even if you try to sell it back into the channel, you may have been able to do it here and here, but then you would have got your stop loss would have been hit here. So it's very difficult to trade in this choppy market. Again, what we want to see is a fresh formation. We are seeing a cross on our moving averages here, so potentially we may see a lower low. But again, if you're looking at the euro as an overall, it's currently strengthening against the dollar. So it's unlikely that we'll see it weakening against the Japanese yen and strengthening against the dollar. We're potentially going to see euro strength across the board and a breakout of this channel. But we want to, again, what we want to see is a fresh formation. We want to see that breakout, make a new high before we want to really get excited about this market. Potentially, we could be looking for trades for longs as a breakout of this channel or pullback, and then subsequent price increase. But at the moment, as it stands at 8:45 in the morning, on all of our charts, there is no markets of interest in the 4 charts that we're looking at. We are at an interesting pivotal time in terms of the US dollar is looking like it's broken out of the channel and potentially going to see some more downside pressure. This candlestick doesn't look very nice at the moment in terms of my current positions, and we may see a challenge of DP before this price sells off. But we can come and have a look at this tomorrow. Now, if you enjoyed today's analysis, please show your appreciation with likes, comments, shares. Join my YouTube channel so that you don't miss analysis video in the morning. Now, if you want to get access to this analysis video when I do it at 8:30 in the morning and watch it live, click the link below this video in the description and get access to the Hidden Wealth University, where I teach you how to trade like a boss. I show you how to absolutely dominate price action, and I show you how to make consistently profitable trades in the market every day like I do. I've been Malachi Kelly, forgot my own name. You be awesome, happy trading, and I'll see you tomorrow.